Ind AS 33, earning per share. Earning per share is of two types: basic earning per share, diluted earning per share. How to calculate basic earning per share? Earnings available to equity shareholders divided by weighted average number of equity shares outstanding during the period will give basic EPS. How to calculate earnings available to equity shareholders? EBAT less interest calculated at effective interest rate gives EBT, less tax gives EAT or PAT. Less preferential dividend including dividend distribution tax plus or minus settlement payment plus or minus income and expenditure not recognized in P&L although it was an item of P&L will give earnings available to equity shareholders. Preference shares. Preference shares are of two types: cumulative preference shares, non-cumulative preference shares. In case of cumulative preference shares, dividend is to be deducted from current year for calculation of basic EPS, whether or not it has been declared in the current year. In case of non-cumulative preference shares, dividend is to be deducted from current year only if dividend is declared. If question is silent, assume cumulative preference shares. Next, settlement payment. If preference shares are redeemed at premium during the year and its premium was not planned earlier, then such premium paid is to be deducted from P&L. If such premium was already planned, it would have been accounted in effective interest rate, that is ERI or EIR. In case of discount on redemption, which was not planned earlier, add back such discount to P&L. Next, income and expenses not recognized in P&L, although it was an item of P&L, where any item which is required to be recognized in P&L, but it is debited or credited to securities premium or other reserves directly. Example, preliminary expenses. The amount shall be deducted from P&L for the purpose of calculating EPS. While calculating EPS for consolidated financial statements, only consider parent share of profit in consolidated financial statements. That is, do not include NSA share for calculating the EPS for consolidated financial statements. Weighted average number of shares. The weighted average number of ordinary shares, ordinary means equity shares, outstanding during the period is the number of ordinary shares outstanding at the beginning of the period adjusted by number of ordinary shares bought back or issued during the period multiplied by time weighting factor. The time weighting factor is the number of days or months that the shares are outstanding as a proportion of the total number of days or months in the period. Deciding the date for issue of shares. What is the date for issue of shares? Shares are usually included in weighted average number of shares from the date consideration is receivable, which is generally the date of their issue. That means the date of issue of shares. Situation of issuance of ordinary shares. Date of inclusion of ordinary shares in the weighted average number of shares for calculating of basic EPS. When shares are issued in exchange for cash, date to be included is when cash is receivable. That date should be included. When issued on voluntary reinvestment of dividends on ordinary or preference shares, date to be included is when dividends are reinvested. Next, when issued as a result of a conversion of a debt instrument to ordinary shares, when interest ceases to accrue, that date should be included. When issued in place of interest or principal on other financial instruments, then when interest ceases to accrue, that date should be included. Shares are issued in exchange for settlement of a liability. Settlement date should be considered. Shares are issued as consideration for acquisition of an asset other than cash. When asset is acquired, that date should be recognized. Next, shares are issued for rendering of services to the entity. When services are rendered, that date should be considered. Shares are issued as a part of consideration transferred in a business combination. From the date of acquisition, it should be considered. Shares are issued up to the conversion of a mandatorily convertible instrument. Date of entering into the contract should be considered. In case of contingently issuable shares, date when all necessary conditions are satisfied should be considered, including passage of time. Contingently issuable shares means outstanding ordinary shares that are contingently returnable, that is, which are subject to recall, are not treated as outstanding and are excluded from calculation of a basic earning per share until the date the shares are no longer subject to recall. In case of bonus issue, capitalization of reserves or stock dividend. In case of bonus issue, ordinary shares are issued to existing shareholders for no additional consideration. That is, the number of shares is increased without an increase in resources. The number of ordinary shares outstanding before bonus is adjusted for the bonus issue based on bonus factor and as if the event had occurred at the beginning of the earliest period presented, irrespective of the date of actual bonus issue. Therefore, bonus factor equals to 1 plus bonus ratio. Share split. In case of share split, the number of outstanding shares, ordinary shares outstanding, is increased without an increase in resources, that is, without any additional consideration. The number of ordinary shares outstanding is adjusted for the share split as if the event had occurred at the beginning of the earliest period presented, same like bonus issue. Reverse share split, that means consolidation of shares. In case of reverse share split or consolidation of ordinary shares, the number of ordinary shares outstanding are reduced without any reduction in resources. The number of ordinary shares outstanding is adjusted for the reverse share split as if the event had occurred at the beginning of the earliest period presented. A right issue. In case of right issue, additional shares are offered to the existing shareholders at a discount price that is below the current market price. The right shares issued consists of two elements, base bonus element and the share issued for consideration element. Bonus element means discount portion in right issue. It will be treated. Treatment of bonus will apply to the bonus element in the right issue. In case of share issued for consideration, issue of remainder shares at full market price will be considered. Here, normal treatment of newly issued shares will be considered. That means shares will apply. Steps to compute bonus element in a right issue. There are 3 steps for calculating bonus element in a right issue. Step number 1, compute theoretical X rate fair value per share. Theoretical X rate fair value per share equals to fair value of shares before exercise of right plus total amount received from right issue divided by number of shares outstanding after the exercise of the rights. Step number 2, calculate bonus factor. Bonus factor equals to fair value per share immediately before the exercise of right divided by theoretical X rate fair value per share. Step number 3, apply the bonus factor to shares before right issue. The bonus factor should be applied to adjust the number of shares outstanding before the right issue, both the current year and for the previous year. Next, partly paid shares. Where ordinary shares are issued but not fully paid, they are treated in the calculation of basic EPS as a fraction of a fully paid ordinary shares. Disclosure is made for each class of shares. Diluted EPS. Scope. Diluted EPS, scope and meaning. For the purpose of calculating diluted EPS, an entity shall adjust profit or loss attributable to ordinary equity shareholders of the parent entity, that is the numerator, and the weighted average number of shares outstanding, that is the denominator, for the effects of all dilute to potential ordinary shares. Potential ordinary share is a financial instrument or other contract that might result in the issue of ordinary shares to the holders of the contract at the option of the issuer or the holder. Example, convertible debentures, convertible preference shares, options and warrants, including ESOP, contingently issuable shares. Effect of all dilutive potential ordinary shares on diluted EPS. Effect on numerator, that is, earnings available to equity shareholders. Earnings available to equity shareholders is increased by after-tax amount of interest and dividend, including dividend distribution tax, recognized in respect of dilutive potential ordinary shares and for any other changes in income or expense that would result from conversion of dilutive potential ordinary shares. Effect on denominator. Effect on denominator, that is weighted average number of ordinary shares outstanding. It is increased by weighted average number of additional ordinary shares that would have been outstanding, assuming the conversion of all dilutive potential ordinary shares. Formula: earnings available to equity shareholders plus or minus effect of dilutive potential shares on earnings divided by weighted average number of equity shares plus weighted average number of dilutive potential ordinary shares. Dilutive potential ordinary shares shall be deemed to have been converted into ordinary shares at the beginning of the period or the date of the issue of potential ordinary shares, whichever is later. Potential ordinary shares that are cancelled or lapsed during the period are included in the calculation of diluted EPS only for the portion of the period during which they are outstanding. Potential ordinary shares that are converted into ordinary shares during the period are included in the calculation of diluted EPS from the beginning of the period till the date of conversion. From the date of conversion, the resulting ordinary shares are included in both basic EPS and diluted EPS. The conversion of potential ordinary shares into ordinary shares should assume the most advantageous conversion rate or excess price from the standpoint view of the holder. Only potential ordinary shares that are dilutive are considered in the calculation of diluted EPS. Potential ordinary shares should be treated as dilutive when their conversion would decrease profit per share or increase loss per share from continuing operations attributable to ordinary equity shareholders. The effects of anti-dilutive potential ordinary shares are ignored in calculating diluted EPS. That means if it is anti-dilutive, we need to ignore it. What are the steps to calculate diluted EPS? An entity might have a different number of different types of potential ordinary shares in issue. Each one would need to be considered separately rather than in aggregate. The sequence in which potential equity shares are considered may affect whether they are dilutive. Therefore, to maximize the dilution, each issue of potential ordinary shares is considered in sequence from the most dilutive to the least dilutive. So the sequence must be followed from most dilutive to least dilutive. Step number 1: calculate incremental EPS for each potential ordinary shares. Incremental EPS equals to effect of potential shares on earnings to equity shareholders divided by effect of potential shares on weighted average number of shares. Step number 2: give ranking to each potential equity share. The most dilutive, that is the lowest, incremental EPS will be given rank number 1, assigning the ranks to other potential shares in the ascending order. Step number 3: add the effect of each potential equity shares individually to basic EPS of the continuing operations in the order of ranking given in step number 2. If the ratio of EPS decreases, the potential equity shares are dilutive. If the ratio of EPS increases, then the potential equity shares are anti-dilutive. Post anti-dilutive testing is not required. Step number 4: calculate diluted EPS by adjusting only the effect of dilutive potential equity shares in basic EPS. What is the alternative method to test whether the potential ordinary shares are dilutive or anti-dilutive? Convertible preference shares are anti-dilutive when the amount of preferential dividend per share obtained on conversion exceeds basic EPS. That is, if incremental EPS of the convertible preference shares exceeds basic EPS, then the convertible preference shares is anti-dilutive. Similarly, convertible debt is anti-dilutive when its interest, that is net of tax, per ordinary share obtainable on conversion exceeds basic EPS. That is, if incremental EPS of convertible debentures exceeds basic EPS, then the convertible debenture is anti-dilutive. Options, warrants, and their equivalents. In case of options and warrants, the difference between the number of ordinary shares issued and the number of ordinary shares that would have been issued at the average market price of the ordinary shares shall be treated as an issue of ordinary shares for no consideration. Only these shares are included in calculation of diluted EPS. Here, there will be no increase in earnings available to equity shareholders. There will be increase in weighted average number of equity shares. That means there will be no increase in numerator, only increase will be there in denominator. Options and warrants have a dilutive effect only when the average market price of the ordinary shares during the period exceeds the excess price of the options or warrants. Previously reported EPS are not retroactively adjusted to reflect changes in price of ordinary shares. That means there will be no retrospective effect. Next, employee stock options, ESOP. Employee share options with fixed or determinable terms and not vested ordinary shares are treated as options in the calculation of diluted EPS, even though they may be contingent on vesting. They are treated as outstanding on grant date. Performance-based employee share options are treated as contingently issuable shares because their issue is contingent upon satisfying specified conditions in addition to the passage of time. Next, contingently issuable shares. Contingent shares are contract under which shares are to be issued upon fulfillment of specific conditions. Generally, these conditions are related to specific future date. Contingently issuable shares. Case number one, if no conditions are satisfied by the end of the reporting period, there will be no treatment, that is, not to be included in the calculation of basic EPS and diluted EPS. Case number two, if conditions are satisfied at the end of the reporting period, but testing date is in future, then treat it as potential ordinary shares and include in the calculation of diluted EPS. Case number three, if conditions are satisfied on testing date, include such shares in calculation of basic EPS. Additional points, retrospective adjustments. Diluted EPS of any previous period presented should not be restated for changes in the assumptions used, such as contingently issuable shares, or for the conversion of potential ordinary shares, such as convertible debt, outstanding at the end of the previous period. These factors are already taken into account in calculating the basic EPS and diluted EPS for the current period. Prior period's EPS data should be restated for the effects of errors and adjustments resulting from changes to accounting policies accounted for retrospectively. Next, basic and diluted EPS figures for the current period and for the prior periods should include bonus issue, share split, share consolidations, and other similar events occurring during the period that change the number of shares in issue without a corresponding change in the resource of the entity. That is, there will be a retrospective application. Participating equity instruments and two class ordinary shares. The equity of some entities includes instruments that participate in dividend with ordinary shares according to a predetermined formula with an upper limit on the extent of participation. A class of ordinary shares with a different dividend rate from that of the another class of ordinary shares but without prior or senior rights. Profit or loss for the period is allocated to different class of shares and participating equity instruments in accordance with their dividend or other rights. Entity with discontinued operations. An entity that reports a discontinued operations should use income from continuing operations adjusted for preferential dividends and similar adjustments, if any, as the control number in determining whether potential common shares are dilutive. That is, the same number of potential common shares used in computing the diluted per share amount of income from continuing operations should be used in computing all other reported diluted per share amounts, even if the effect will be anti-dilutive compared to their respective basic per share amounts.